You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan and welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time, go over the market, share some thoughts, and once in a while we'll share our trade of the day. So last couple of days after the Fed, we've had a VIX spike, a really gnarly VIX spike as well. VIX, VVIX, which is actually the VIX of the VIX, rallied all the way up to, I think, 130. So that was just a massive, massive move. But it's kind of interesting. Things are retracing really quickly. This could have been, this is a big change and a big fundamental shift by the Fed. But to see volatility come out of the market this fast, I wouldn't be surprised if this market rallies throughout the rest of the day and early into next week. So what we're going to do today, guys, I thought it'd be fun just to go over the big markets. So looking at the Qs, the IWM, I want to look at gold, I want to look at copper. Whenever we see the big moves from the market, we want to take a step back and look at the bigger picture. So often we get caught looking at 60-minute charts, 120-minute charts, a daily chart. Once we start moving, take a step back, look at the bigger picture, and sometimes now it'll make sense where the market's moving to and where it stopped. So let's go over to the screen. I'm going to start with the VIX 9-day because the VIX 9-day spiked and it's absolutely making a big retracement right now, which if it holds up, that is very, very bullish. So on the left here, I have all the VIX indices up that we follow. And right here, we're looking at the VIX 9D. The VIX 9D spiked these last couple of days all the way to 35.86. It is right back down. And if we look historically of how the VIX 9D moves, it inches up, inches up, inches up, spends a couple of days. This time it spiked and came right back. But this is really, really bullish if there's continued to be follow through from that VIX 9D. VIX 9D 1686. You can use that as your line in the sand. Let's go to the Qs. And we look at the QQQs. The Qs are rallying. Take a step back. What does that mean? Look at the monthly. We don't really look at the monthly too much, do we? But let's look at the monthly. And what I want to show you is the key level. This is December. The low of December is going to be 509. The high of last month is going to be 515. So you can look at a line in the sand as that 515 is a really solid line in the sand to use in that QQQs, 515. But it presents even better if we go to the Russell, because the Russell, and we'll look at the Russell through the IWM, look at the monthly range. Monthly range here, where did it stop? It stopped at the exact tick of last month's range. So last month, the low 217.84. This month, the low 218.07. I love looking at those monthly lows and monthly highs. You can really get some good trades. So whenever the market starts to move quite a bit, I want to take a step back. I want to look at monthly, then I want to look at weekly. Look at the weekly. The weekly, all of these lows, boom, 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 are going to be the exact same as this low. So your IWM, you could have a line in the sand as support, and the QQQs, you have that line in the sand much higher as support. So as long as those QQQs stay above, we are bullish. This IWM. Yeah. Rick, right? And Rick is just saying, wow, the IWM lows are consistent. I'm always going to look at longer term time frames whenever the markets make big moves. So you have the IWM, you have the QQQ. What about, look at oil. Oil's another one. Oil weekly. And how predictable does that come when literally oil is just sitting in its range? I would have to think, in order for the markets to make significant movement, I would think that oil would end up breaking out of this range either higher or lower. I personally am more bullish than bearish oil, but you're certainly looking to buy anytime we get to this lower end of this range. So when the markets start to move, that's when I want you to take a step back and look at the bigger picture. Silver's pulled back a little bit. Again, let's look at the most amount of data. I don't want that. Silver, again, we look at the most amount of data. This is just /SI. Silver right down to its 200 period moving average. That's something to watch for. Now, 200 period moving average, why? Well, indices, stocks, they don't like to stay around big numbers. So that's why we look for these things. It gets above the 200. So silver, a great place to just watch and get a feel for, you want to be long or short silver. Copper is one of the more interesting ones to me. Here's what copper looks like. If we look at copper in a longer term time frame, weekly, copper is right down to its 100 and 200 period moving average. That's what copper looks like. We're long copper in our portfolio, but it's having a reason. Right now with the 100, 200 period moving average, if you just take a step back, you look at how these performed historically, this is a really good entry point for copper right here. Okay. Do you guys have any questions? We have all the questions up in the chat. If we go through a couple of our different names, the key is going to be watching the VIX today. As that VIX sells off, the markets will trade higher. Quantum names getting a bounce. These things are so volatile. We're just looking for key entry points in these quantum names. Let me pull up some of our charts here and go through each one of these quantum names. Here's something to point out. So we have our expected move, right? We just put a little bit more data on here. So here's our expected move, and Friday expiration, which is today, we get the new expected move. Here is the QQQ. It's interesting why this month the volatility is actually higher than it was last month. Why that's interesting is last month you had earnings. The only reason it's higher is because of this little flash crash that we just had. So I would think there's a high probability that the QQQ stay within this range for the month. Now the range is going to be 548 high to 480 low. It's still quite a bit of volatility, but it's really, really surprising that the volatility is actually higher going into the end of the year than it was for the December earnings cycle. So that is pretty interesting to me. Watch that VIX 9-day. As those soften up, these markets will just go higher. So that's what I got. In this next portion, we're going to go over the balance of our advanced notice portfolio. We're going to go over any open trades that we have to the end of the year. Also, guys, this is my last MIT Live of the rest of the year. We're going to be putting out videos each day the market's open, but as far as being live, I'm taking a break. I'm taking the family to the Bahamas. We're going there for Christmas and New Year's. Just going to take some time to chill. I hope you guys do the same thing. This is the time to relax. This is not the time to put on a whole bunch of risk and fight with the market. If you are trading, trade really small, play around on the edges, trade those 1 lots and 2 lots, but don't trade enough that it's going to ruin your holidays. Okay? Have a great week. Thank you so much for hanging out with me. We have plenty of videos on the YouTube channel to continue your education. For everybody in our All Access, you guys hang out. We're going to go over the advanced notice portfolio. Thanks, guys.